Read this. Americans are more educated than ever before. We have access to more technology than ever before. And our economy is the biggest it's ever been. It all sounds good until you hear that a record number of Americans are poor and most of America struggles with money. Feels a little off, doesn't it? Well, there's a reason. Our economic system profits when you make stupid financial decisions. Take a look. Banks profit when you are in debt. Corporations profit when you spend your money, and the government profits when you are just an employee, because as an attorney who's not your attorney, I can tell you that you pay the highest tax rates as a W-2 employee. You also qualify for the lowest tax breaks when you are an employee, but when you're an investor, you get lower tax rates and bigger tax breaks. It is in their best interest for you to be broke and drowning in debt, because that means you are fully optimized to stimulate the economy, which means you're working very hard to make everybody else in the economy rich. But I'll talk more about that in just a minute. We are trained to be broke employees, because when you're broke, that means you've spent all of your money making everybody else rich, and when you don't have any financial cushion, now you're gonna feel stuck at your job because you don't have any breathing room to try something different or leave. Now, while all of this sounds bad, I do have good news, because it doesn't have to be this way. When you learn the 5 steps that I'm about to show you in this video, now you'll be able to use this exact same system to your advantage instead of being screwed over by the system. I'll show you. Step number 1 is get your mindset right. Now, I get it. Nobody likes talking about mindset. Everybody wants to get to the practical stuff, and I'm going to get into that in this video. But if you don't have the right mindset, it's going to be impossible for you to build wealth for yourself. I call this channel the minority mindset, because all success starts with your mindset. The first mindset shift you need to make is stop letting these people take all of your money. In the beginning of this video, I told you that banks profit when you're drowning in debt, because when you're drowning in debt, now you're working hard to make interest payments to your bank, which makes your banker richer. But that banker didn't put a gun to your head telling you to buy that big of a house. They didn't tell you to go into credit card debt. They didn't tell you to buy that car. Your corporations profit when you spend all of your money. In fact, they love it when you spend money you don't have, because that means Gucci is selling you a scarf that they normally wouldn't be able to sell you because you can't afford it. But Gucci didn't put a gun to your head telling you to buy that scarf. And governments profit when you're just an employee. Now, I get it. We're never taught this financial education, but the government is giving you tax breaks when you become an investor. And this is where the first mindset shift you have to make is stop trying to look rich and understand the game, that if you want to win, you got to stop falling into that trap. The second mindset shift that you have to make is you have to believe. I mean fully believe with every cell in your body that you can and will become wealthy. Because if you don't believe it's going to be possible for you, I guarantee you it's not going to happen. Because when you go around saying rich people are evil, I can't believe that this person spent money like that, oh my God, money is so bad and evil, you're never going to want to do something that's going to be bad. You're never going to want to do something that you believe is evil. And if you think money is bad, if you think becoming wealthy is bad, why would you want to go out and do something that is bad or evil? So you have to believe that you will become wealthy, which means you have to start appreciating wealth. And then the third, and probably the most difficult mindset shift that you're going to have to make, is not playing the blame game. It's very easy now to blame the bank for the situation that you're in. It's very easy to blame corporations for forcing you to spend all your money, and it's very easy to blame the government for screwing you over. I get it. There's a lot of crap out there. But if you want to get out of the situation that you're in, you cannot keep blaming them for your problems, and now you have to start taking responsibility for your problems. I'm not saying that these things don't happen. I'm saying now we got to stop worrying about them, and you got to start worrying about you. Step number 2 is make some serious sacrifices. Now, this step is going to hurt a lot of people's feelings, because if you look online, a lot of people are selling you how to burn fat without putting in any effort, how to get big without actually going to the gym, and how to get rich without actually putting in any work. And I'm here to tell you that that's a whole bunch of crap. If you really want to become wealthy, it's going to take a lot of work, and it's going to start by making real sacrifices. Let me give you an example. You graduated college, you got a good job, and now you're making some decent income, and you want to show it off just like everybody else. And the best way to do that is, of course, getting yourself a brand new BMW. So you go into the dealership and you find this $50,000 new BMW that you want to drive. Now, you could buy something a little bit more expensive, but you're being financially smart just driving around in a $50,000 car. But here's the thing, you don't have $50,000 in your bank account. So you, like everybody else, finance this car. And to finance this $50,000 car, you put down $8,000 as your down payment. And now you have a monthly car payment of around $850 a month. That doesn't include your maintenance or your oil changes or the premium gas or your expensive insurance. It's $850 a month for your car payment, which honestly is kind of normal nowadays because everybody has $1,000 a month car payment, but you're paying this $850 a month to BMW. Now here's the part that hurts a lot of people's feelings. Financing your car is a triple whammy because number one, you're paying interest on this car. Number two, this car that you're paying interest on is a depreciating liability because in 5 years, this car is not going to be worth $50,000. It might be worth $25,000. And then number three, this car has a limited lifespan because this car is not going to last you forever. After you finish this car, or you finish paying it off, you're going to need a new car, which means you can pay it off, but then you're gonna need another car at the end of it again. That's why this random guy on YouTube actually cares when you, random viewer of this random guy on YouTube, drives around in a car that's keeping you broke. So what I want you to do is get rid of this car. Now I know what you're gonna say, but Jasprit, I need my car to get to work. Now the interesting thing about this is you're going to work just to pay for this car, but instead what I want you to do is I want you to get rid of this car, and then instead of driving around in a financed BMW, I want you to take this $8,000 down payment and use this to buy a car with cash. Get yourself a used but working Toyota Corolla, maybe a Toyota Camry. It's gonna be older, it might have some dings on it, but it'll be working, and it's gonna save you a whole lot of money. And then you take this $850 a month and you put this into building your own wealth because you now don't have to give this to BMW. If you own Gucci or Louis Vuitton, but you don't have a stock market portfolio, do not walk into Gucci. If you have a Rolex, but you don't have any cash flow, do not walk into Rolex. You do not go out and spend money at these places until you have the assets first. And I'm gonna take it one step further. If you have credit card debt, you should also not have a Netflix subscription. Now, it's not because you're gonna save $15 a month. It's because the average American is watching more than 2 hours of TV a day. They're watching more than 2 hours of Netflix a day. And so what I want you to do is take that TV time, that brain rotting time, and turn that into education time. That way now you can start learning how you can make more money to pay off the credit card debt. That way you can learn how to invest your money to get out of the credit card debt and learn how to build your wealth instead of making Amex richer. Now, I get it. It's gonna be hard, but you shouldn't feel comfortable sitting there watching TV with your family when you have credit card debt that's charging you 25% interest, because that is skinning you alive financially. Step number 3 is invest the extra money that you have. This entire video, I've been showing you how our economic system is designed to keep the majority of people financially stuck, financially poor, and financially stupid. Well, the reason why is because the majority of people are just consumers and they're just employees. Our economic system gets rich off of you when you are just a consumer and you're just an employee because you're spending all of your money and you're gonna pay the highest tax rates. But as soon as you become an investor, now you get to win in this economic system because now you can invest in banks. You can invest in the companies that are selling people things. You can invest in the economic system, and as an investor, you can qualify for lower tax rates. But that requires you to have some extra money. And oh, look at that. You got an extra $850 a month because you sold your BMW. What would happen if you invested that $850 a month? If you invested the $850 a month into yourself instead of just giving it away to BMW, and you got the average market return, which historically has been about 10% a year, and you invested your money for 25 years, here's what would happen. If you just owned a car, this car after 25 years would be worth $0. But if you invested that same $850 a month, you would have over $1.1 million with the average market return. If you did this for 35 years, well, now you're not gonna have $1 million or $2 million, you're gonna have over $3 million. And just so we can have a little bit of fun, if you did this for 45 years, well, now instead of having a car that's worthless, you would have an investment portfolio worth over $8 million. So what would you prefer? The BMW today or the millions in your investment portfolio in the future? And remember, if you want some additional resources as an investor, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like stocks, housing, crypto, the global markets, and our own economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning. And when you join Market Briefs, you'll also get my investing masterclass, where I break down how you can start investing and find investment opportunities before everybody else. It's completely free. So if you want to get the investing masterclass and market briefs, I have the link for you to join down in the description below. Before I move on from this step, I do want to highlight one more thing, because a question that I often get is, okay, Jaspreet, that's cool that the average stock market return is 10% a year, but every time I invest my money, I lose money. How do I just get the market returns? Let me show you. Now again, I can't tell you what to invest in. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But there are ways for you to invest in the broad stock market at large. For example, there's a fund out there called VTI. You can use any stock brokerage that you like to buy this ETF. ETF just means it is a basket of stocks, and VTI is a fund that gives you exposure to the total stock market. So if you just want to invest in the total United States stock market, you buy that, and now you own a little piece of all the stocks in the United States stock market. But if you wanted to get a little bit more granular, say you wanted to invest in the S&P 500, that's a group of the 500 largest companies in the stock market, well, there's funds that allow you to do that as well. For example, SPY. SPY. This is an ETF, again, a fund that gives you exposure to the 500 largest companies in the stock market. And now, well, the nice thing is you don't have to worry about managing your portfolio, because let's say one company like Amazon goes bankrupt. Well, if you invested in the Amazon stock, all your money would have disappeared. But Amazon is in the S&P 500, meaning if you invest in SPY, you're also going to own some Amazon indirectly. But if Amazon were to go bankrupt here, SPY would just kick Amazon out and replace it with a different company. This way, now you're just investing in the largest 500 companies, and you don't have to worry about managing your portfolio or picking the perfect stock. So yes, there are very accessible ways for you to get exposure to the average market returns. And I got to give you that one more thing you need to know. Markets don't always go up. Just because we've seen an average of 10% returns a year doesn't mean that the market goes up every single year. I mean, over the last 100 years, we've seen 16 recessions and 25 market crashes. But despite the recessions, despite the market crashes, we've continued to see the market go up, which is why the key is to have a long-term mindset. And if you're investing in good assets, when you see markets go down, buy more. Step number 4, earn more money. I talk to a lot of people who say, Jaspreet, if I just had an additional $1,000 a month, all of my financial problems would be solved because I could pay my bills and have some extra money to save and invest. But what ends up happening, and I've been teaching financial education for a decade now, is when people actually go out and earn that extra $1,000 a month, your income goes up to here, and then all of a sudden your expenses, boop, shoot right up as well to be in line with your new income. And why does that happen? Because when you don't have a disciplined spending, you don't have a disciplined investing, when you don't have a disciplined saving method, well, as you earn more money, you just spend more money as well, because now you get yourself a nicer car, you upgrade your house, you go to Cancun a little bit more, you go to fancier restaurants because you have more money to spend, because we are bred to spend, and that's why you need a money system. One of the simplest systems that I teach is 75, 15, 10, which says for every dollar that you earn from here on out, 75 cents is the maximum that you're allowed to spend. 15 cents is the minimum you need to invest. 10 cents is the minimum that you save. And now you're going to go out and create 3 different bank accounts. One for your spending money, one for investment money, one for your savings money. Yes, this is necessary, because if you keep it all in one bank account, I guarantee you're going to mess up and you might accidentally spend some of your investment money. And it's very hard just to keep track of everything when it's all in one bank account. So yes, create 3 bank accounts. I get it. It's a little bit of extra work, but your bank will allow you to do this for free. And if they don't, go find another bank. Then when you create the 3 bank accounts, create an automation that way anytime you get paid, this money will be transferred here and this money will be transferred here. Now you can't accidentally spend this money or this money. Now, when you have these automations set up, this is where earning more money can be the most powerful. And you might say, well, Jaspreet, how do I earn more money? And this question is very interesting because it really depends on you. They say personal finance is personal, and the reason why is because some of you are just gonna say, I'm gonna go drive for Uber. That's gonna be my new stream of second income. Some of you would say, I would never do that. Some of you will say, I'll get a second job. Others of you will say, why would I ever do that? Some of you are gonna say, I'm gonna work for a raise or a promotion. Others of you will say, I would never do that. Some of you are going to say, I'm going to start a side hustle. Others of you will say, I would hate to do that. And some of you are going to say, I want to start my own business. Others of you, I would say, I would never want to take on the headache. You have to figure out what you want to do. There are so many options out there, whether it's through your job, getting a new job, getting a career change, getting a career upgrade, getting a certificate, getting a new degree, to potentially starting a side hustle or starting your own business. I'm not going to go over all the different options in this video because I've made multiple videos talking about this before, but the whole idea is you have a lot of different ways that you can earn more money. Okay, spend some time figuring out how you want to earn more money, whether it's starting your own thing, getting a new job, or doing it through your own career, and then spend effort and time and energy actually working towards it. When you put the time and effort into it, it's interesting how you start to see the results after a little while. It's not immediate, but as you earn more money, just remember 75, 15, 10, that way you're actually saving some of that extra money and investing some of that extra money. And now we're on to step 5 on how you can win in this financial system. Remember, in this economic system, when you are just an employee and you are just a consumer, like most people, you are going to be screwed over. Banks are going to profit off of you, corporations are going to profit off of you, and the government's going to profit off of you, and everybody is using your hard-earned dollars to make themselves rich while you stay stuck. The way you get out is by, number 1, changing your mindset. Then number 2, you got to make some financial sacrifices so you have some extra money. Then number 3, you got to start investing that money, and then once you know how to invest, once you start building that financial mindset, now you got to work to earn more money. That way you have more money to invest, because wealthy people are focused on owning more assets. That way they can build their wealth while everybody else is just working on how can I make more money from my job to pay my bills. Now we're on to step number 5. Invest in your knowledge. You know, the weird thing about our education system is that we kind of are taught to think that our education ends with school. That when you're done with college, you're done with grad school, you're done with professional school, that your education is done. When in reality, that's just the beginning. That's not the end. When you want to build your wealth, you have to understand financial education, which is very different than formal education. And I had to learn this the hard way because I grew up in a traditional Indian house. My parents really wanted me to be a doctor. And when I decided I didn't want to be a doctor, my dad was very upset and said, Jasprit, if you want to keep any pride in the family, you have to at least become an attorney. So I went to law school. I got my law degree. I passed the bar exam. I'm a licensed attorney, but I've never worked a day as an attorney. And this is where I want you to understand that there is formal education, which is not a bad thing. I mean, having a nice degree, having a nice job, that's a great place to start. But when it comes to building your wealth, you also have to have the financial education, which is very different than your formal education. Financial education is the things that I talked about. How do you spend your money smartly? How do you create a system so you have money to save and invest every time you get paid? How do you invest your money? Are you investing in stocks? Are you investing in real estate? And then how do you analyze your investments? I mean, are you going to invest in ETFs and index funds and mutual funds, or are you going to invest in individual companies? If you're going to invest in individual companies, how do you value the stock? How do you research the companies? How do you know which companies to invest in? This is that research. This is actually something that my team at Briefs Media publishes. We have a product called Briefs Pro. This is for our pro investors, where we break down market shifts, we break down investment opportunities, we break down where money is moving, because we have a team of market analysts that are constantly studying the markets, and they're going out and talking to executives. They're going to trade shows to see how money is moving and how these things create investment opportunities. If that's something you're interested in, you can always check out Briefs Pro. Or maybe you want to invest in real estate, and now you have to start learning how to analyze real estate deals. You have to start learning how to manage the numbers, how to manage the cash flow, how to find a good property manager, how to understand how to manage and deal with tenants. There's all a learning process, and you have to be willing to take that start. And the first start is understanding that you have to be willing to learn and invest in your own financial education, because we're not taught this stuff in school. But if you really want to accelerate your wealth, you have to be willing to invest in your financial education. Now, I'm not saying you have to go out and spend thousands of dollars to learn how to do this, especially right off the bat. But start by just watching YouTube videos. I know you're clearly here, but continue investing in your mind. Consume the free content out there. Listen to podcasts, watch more videos. Then maybe you start buying books, and maybe you start taking classes, or maybe you start investing in your own investment research. That way you get more data on things that you can potentially put your money into, because yes, that stuff does cost money if you want to get access to better research. But if you're willing to invest in your own learning, that can pay some of the best dividends and some of the best returns if you're willing to put in the work. Now remember, you're going to make mistakes, you're going to screw up. I've screwed up more than really anybody else because I didn't grow up learning this stuff. But if you're not willing to make the mistakes, you're never going to see the upside. Don't beat yourself up when something goes wrong. It's a part of the process. We call it real life tuition in the business world. because you have to learn how not to do things so you can learn how to do things. But keep trying, keep learning, and every day, just take one tiny step forward. And if you do that, you're going to surprise yourself where you're going to be in 3 years, 5 years, 10 years, and pretty soon, your friends are not even going to recognize who you are. Your family is not going to know what type of person you became because you've changed your finances so drastically, they're going to be coming to you for financial advice. If you make $80,000 a year from your job, you need to make $80,000 a year from your investment income to be able to quit your job and live your life without changing anything you're doing. With your job, you have to go into work every single day to keep getting paid. With your investments, once you put your money to work, it'll keep paying.